Let's get Sandip Agarwal, the VP Wholesale Capital Markets in Edelweiss, also into the conversation. Sandip, you watched it from a distance without getting into the conversation. Your thoughts on Infosys?
So I have limited access to all the numbers, but on the prima facie the numbers which I have looked, a 4.7% kind of dollar growth and 5.4% kind of volume growth, it is definitely one of the best performance after a long wait, and we have been very bullish on this counter for some time. The key reason of our bullishness was always that they have to get some traction in multiple areas, and I think they have started on those areas, although I don't have vertical numbers or geographic numbers right now. But the way after Dr. Vishal Sikka came in, the focus on the high growth areas was very, very high, and they did right deployment at right time in those areas. And the manpower issue, which was another big issue, that post Narayan Murthy takeover, there was a lot of effort happening in that area, and I believe that now those efforts are paying off. So we clearly have Infosys already been top pick in the sector, and the reason was that revenue growth will pick up, and attrition, which has been always leading to a lot of cost rise, that will come down. So I think those things should start playing out from now, and we are obviously would look to see more numbers to give a clear view. But broadly, whatever numbers I have been able to see, those are looking good.
All right, Sandip. Well, yes, it is Infosys reacting to its very good set of numbers. Also, some more details coming in. The volume growth, by the way, is the highest that the company has seen in the last 19 quarters. That volume growth of 5.4%. And 6 large deals have been signed in this quarter with a TCV of close to $688 million. So it's looking very, very good. But on the flip side, it's actually a very high-octane day of trade. It's begun with Infosys up 7% and Sun Pharma down almost about 15% now, reacting to that profit warning. Nilesh, I want to get your thoughts in on this. This is the bluest of blue chip names, but now a profit warning coming out from the company. What would your advice be to investors?
I'd probably believe that it's probably better to kind of still be on the sidelines. I still think it's probably still early to kind of go out there and do some bottom fishing. Because yes, they have given a warning, and something normalcy is not like to kind of get restored very soon in terms of actual performance. We've seen that when companies make big bang acquisitions, and at times either they overpay for it, or probably the actual hits that they need to take later on are a lot higher than what they estimate at the time of actually making the acquisition. This is something which has always been prevalent for years, for decades. It's nothing new, and it looks like that this time around also Sun Pharma seems to have basically
So wait on the sidelines, don't trim your positions in Sun Pharma. That's
I don't think so, because I think at the end of it, this is a blue chip, it's a quality company, it will get back. A lot of leading companies do get into very difficult situations like this, but ultimately they come out pretty good and come out very strong. So I think it might just be a wait for maybe a couple of quarters, 3 quarters to go. But I think after that, Sun Pharma will be in a good position. So maybe over the course of next 2-3 quarters, you could take advantage of any further slide in the stock price to kind of build up a position.
Permit me to gloat over the good news for the moment. I mean, yes, we will come back to the bad news, but Infosys up 7%. Rima, any more data before we ask Dipan if he will change his mind about big IT companies?
Well, the constant currency growth this quarter has come in at 4.4%, which just reiterates the strong performance on the top line. Apart from that, if you look at the constant currency performance on a year-on-year basis, it implies a growth of 10.9%, which gives you the confidence that yes, the company will meet its FY16 guidance. And it's a significant improvement compared to the 6.6% growth that they saw in Q1. So I'm comparing it on a year-on-year basis, and there you can see the improvement. So from a 6.5% growth on a year-on-year basis 1 year ago, they've managed to improve it to 10.9% in constant currency terms, right in the middle of the company's guided band. And if you remember in the conference call previously, the management had indicated that maybe H2 would even look better compared to historical averages. So Q1 is good. If you add the fact that H2 is going to look better than what you normally expect from Infosys, you're going to have a fairly good year in line. Apart from the one more point about the internals, attrition is very strong. It's sharply trended down, and now it would be similar to the industry. So that's a big positive. Client metrics are looking good, but deal wins have improved significantly. It's at $688 million this quarter. It compares to $414 million just in Q4, which means on a quarter-on-quarter basis, it's gone up by nearly 50%. Strong deal wins always give you the revenue visibility. And it's not just about, the company meeting its FY16 guidance. They're on track probably to meet industry growth levels in FY17. And now maybe the street will start believing its 2020 guidance of $20 billion in revenues. That was seen as an aspiration. And if this, run rate continues, maybe the street will start pricing that in, which they were looking with skepticism. So from a stock market point of view, the street was not convinced about its forward-looking guidance. If you start pricing it in, then there is scope for the EPS to start looking up. Maybe you will start valuing it more. It's currently trading at a forward valuation of 15 times, lower than the 18 times that TCS has been accorded. So you already have a 20% gap thereabout. So with growth rates catching up, maybe there is a case for not only EPS to go up, but even the PE to go up, because this is an all-round strong performance from Infosys. The only thing is, considering how volatile it's been, Q4 was a across-the-board miss. Q1 is an across-the-board beat. You want to see this performance repeated in Q2 for all guns blazing.
Yeah, but then there is the guidance, so there is the confidence with which they are saying that they will be able to repeat their performance. Yes. Dipan, last word from you on Infosys. What's your sense? Is this looking like a turnaround script now?
Yeah, well, certainly it's looking like a turnaround script. But, we are used to the 25% type of top-line, bottom-line growth for IT companies, large and mid.
Not in
and
one
what has been
step,
missed in this whole thing is 5% year-on-year growth. See, from an investor point of view, we want to be in a company where there's 5-7% year-on-year growth rates. That's the question you need to ask yourself.
Okay, by the way, the market has slipped into the red, so we should just take cognizance of that. Although Infosys numbers have been good, it's in a trajectory of its own. The rest of the market, the Nifty is actually below the 8600 level, and it is the Bank Nifty as well that is in the red this morning, and names like Sun Pharma are down quite a bit. Nilesh, I just want to get your last word in on Infi. As Rima was pointing out, a case could be built now for EPS upgrades to come in as well. What is your own estimate? Would you scale up your EPS expectations? And as far as the Infi versus TCS argument is concerned, has Infi won, at least for the near term?
Well, it looks like. I think this round clearly has gone to Infosys. There's no really doubt about that. I'd probably think that over the next couple of years, it would be fair to assume that Infosys can have an earnings growth of about 15%. They're guiding at about 10 to 12% top-line growth, which I think probably in terms of earnings growth could translate about 15%. The key is margins. If they can get back from that 24% to 25, 26%, that could basically add to the growth. But I think that for the first couple of years from now, I think it'd be safe to kind of assume a 15% kind of a growth, and then maybe the year 3 from now could probably land up Infosys at about 18-20% growth. So on the whole, I'd probably think Infosys is getting into a period of about 15 to 20% earnings growth over a 2 to 3 year horizon.
In that case, should not the valuations expand? So what would you look at in terms of valuations? Will you be confident with 16, 17?
I probably think Infosys might even get to 18-20 times.
So bridging entirely the gap with
absolutely, because I think Infosys is a candidate of quality growth at reasonable price. That's the way I'd put it there. So I think if you can find a nice frontline blue chip company growing at 15-20% on a reasonably risk-adjusted basis, I think it becomes a strong candidate for outperformance, and that's exactly where Infosys is currently poised at.
All right, stay on. We have to ask you about the other IT stocks as well. But Anuj has joined us. Normally is with us in the studio, but today we have a house full here. Anuj, your thoughts on the market itself? It's flattened out now after starting in the green.
Yeah, I think Infosys has done market a big favor, Lata. Make no mistake about that, because Sun Pharma's negative impact now is 41 points, and Infosys is accounting for about what the last count 33 points.